The following is a paid program, and the views expressed on this show do not represent the views of WJZ-FM, Entercom Communications, its sponsors, or affiliates.
The following is a pre-recorded show. Welcome to Winning in Retirement with your host, Brian Akers, certified financial planner professional and founder of Akers Financial Group. Now, helping you win in your retirement, here's Brian Akers.
Welcome to Winning in Retirement. I am Brian Akers. Today I have with me certified financial planner practitioner Alex Monk. He works alongside me at Akers Financial Group. Welcome to the show this morning, Alex. How are you feeling?
I'm feeling great, Brian. It's good to be here. And I think you're also a certified financial planner yourself, right?
Yeah, for a couple of years. I guess next year be 30, so it's been a good career being a certified financial planner. It's about a different kind of approach, and that's really what this show is going to be all about today. What we want to try to explain to you guys is this. Right now, are your investments experiencing tricks or treats? Sorry, I couldn't even get my joke going right. All right, let me say that again. Right now, are your investments experiencing tricks or treats? Volatility and what to do with your retirement money. So many people in times like this, they want to make decisions on commotion, emotion, or potions. We think it's time to look forward with forward motion. What do you think of that, Monk?
All these puns are a little spooky.
It is. It is Halloween Saturday. It is Saturday before an election. It has been a very volatile week on the stock market. What do you think of the market and the movements this past week or so?
So I think there's a lot of different stuff going on. The COVID cases are ramping back up. Europe might shut down. There's an election, and we're fairly divided over that, it appears. And there's a lot of panic out there. I mean, people are, I guess, I don't know, emotions are running high right now, let's say. And that's not the time to make decisions about what to do with your money if you're all in the market or you have some in the market or whatever the amount is. It's not the time to make rash decisions. But it is a good time to make sure what you're doing makes sense. Does that make sense, Brian?
Yeah, I think it does. I mean, what happens is that any and all news can make the market go up or down depending on how you perceive that news. It's like when you think about the summer and you think about the fall that was coming and the winter that was coming, there was many things that we told our clients, especially even in our June market review, was the fact that the fall and winter will be tougher for the virus because of people coming indoors, because of colder weather. It's going to be a natural thing for winter, and it'd be a tough time for the markets. Also, October would be tough because of earnings reports. We knew earnings reports were going to be tough. It depends on how you look at the numbers, but generally earnings were good compared to last quarter, but terrible compared to last year when things weren't locked down. So what you have here is this. We have statistics and information, and then we have the emotions of the market and the swings. What do you think makes up the extreme volatility nowadays?
Well, there's a lot of indexing out there. There's a lot of people panicking. I've gotten, I don't know, I can't even count on my hands how many calls this week with people almost in a tizzy. What are we going to do about the election? And I'm like, well, do you know who's going to win? And then do you know how the market's going to react? So those are two things that are not easy to predict. And if you have the right setup, the right mix of investments already, this is just normal. Turns out we elect a president every 4 years. So these things happen. You just have to be prepared for it. And that's really what we want to talk about, is preparing for these things so you're not caught off guard.
Well, it's like, are your investments experience tricks or treats? Now, when I think about tricks and treats, I think of candy, which is nice. But so I like tricks and treats. That's a good thing. But what happens with the market, it's like when you see a market do a trick or market go up or down, I think earlier this week went down 900 points on the Dow. Now, that sounds like a lot of points. About what percentage do you think that was, Alex?
That's somewhere around 3.
Yeah, so it's around 3%. Is that a major move in the market?
No, that's not a major move. Now, the whole week as a whole, it moved maybe 5-10% from the peaks.
Right.
Not all this week. But it got back up. I mean, it's had peak to trough about 40-50% in a trading range. That is a big range. 3% is not a big deal.
But 900 points on the Dow sounds like a lot, and that's something we're going to have to get used to with the Dow north of 27,000. So one of the hardest things to do is to understand the numbers that are being thrown out and how it affects you on a day-by-day basis. And what happens is this: to be winning in retirement is almost the opposite of relying on daily news and daily noise. We need to relate our emotions of our financial security not to having 100% of our money in the market, not to 100% day trading or trying to catch waves or certain down and ups and trying to trade quickly. That's for a portion of the money, not for all the money. So what do you think of the concept that market noise is something we need to ignore as we get closer and closer to retirement, because we've done a great job of financial planning and asset allocation?
Yeah, Brian. So if your asset allocation's already set up, it should be in a situation where you're expecting these type of things to happen, because the market corrects, the market goes into bear market territory occasionally. And if you plan on having a 30-year retirement, you're going to see that 2, 3, maybe more times. So it's ignorant for us to get 10, 12, 15 years away from the last crisis and think that the market can't go down again. We need to be prepared for that.
Well, there's a lot of newer investors that are trading, and they got to experience some of the tech run. I mean, this summer was an unusual tech run that was almost like the late 90s, and that really hasn't happened in a long time. So one of the things I see is that you sort of get emotional in certain stocks because they doubled, they tripled in just a short period of time, and you think that's going to happen forever. In reality, stocks just like trees don't grow to the sky.
No, and the type of investors that we've seen come into the market, I wouldn't call that investing. I'd call that gambling or day trading, not investing. Because investing in stocks, you have to have a long-term approach. You can't judge it on 6 months, a year.
Right. I mean, there's some people I was talking to this week, and they believe heavily in the trading in quick ranges and whenever you get a certain percentage profit to get out. My problem is this, is if you buy a high-quality company, why should we get out of a high-quality company? High-quality companies are great companies. They'll deliver over time consistently.
Well, it's easy to look backwards and say that was the right move that day. But you're not going to know if that's the right move tomorrow. And instead of trying to pick these tops, these bottoms, which is really a fool's errand if you ask me, figure out how much money you want to have at risk or makes sense for your overall picture, and let it do its thing. Right? These things are long term, so you got to wait.
All right, so when you think about Halloween, you think about the market, and you think about the commotion, you think about where does that information come from? It comes from a lot of TV shows, a lot of social media, a lot of things that want you to read, because the more you read, the longer you read, the more advertising dollars they can get. And so that drives not the fact that it's driving the information that wants you to be a long-term investor. It wants you to be a long-time viewer, or someone to read it, someone to subscribe to it. They are marketing and sales using these movements of the market to drive us into buying certain things and selling up and down very quickly. And that's almost the opposite of solid, good financial planning and good and long-term investments.
Yeah, and those news articles, part of that 24/7 media cycle, it plays on fear, it plays on emotion. It gets them ratings. Even social media, if they can capture your attention that much, they're making money. The more time they have, the better. It's crazy the way it's shifting to online companies and tech companies being the advertisers because they have the majority of our time now versus TV. But I mean, I don't really watch many TV shows with commercials. Do you, Brian?
Not the first time it airs. I believe I try to avoid it the best I can. But I guess the news, the financial information, I do have that on many places, trying to just read and keep up with the news. Not to do quick trading, but to know if a quality company or something actually is fundamentally wrong with the stocks itself. Actually, when you think about the market, there are things fundamentally wrong with the market right now. What I mean by that is there's a virus, and that virus is going to affect us well into 2021 and maybe longer. And that's going to affect certain industries, certain companies greatly, and that will affect each and every one of us. That's going to cause some companies to do well because they might have a product or something, a service that they do that is good for this environment. Or it might be the opposite for a company where this is the worst case for them and that they can't keep going. These are all things you have to look at when you're building your portfolio. And we call that readjusting a portfolio into the new environment, the new concepts of the stock market, making sure you're in the right place from today on. One of the basic ideas is this. You look at a portfolio and you say, well, here's the list of all the stocks. Would I buy them today? And that's a good way of evaluating a portfolio when you're sort of starting out and looking at a second opinion. Right, Alex?
Absolutely. And that can thinking about it that way can really give you a clearer view of, is this a value trap, something I'm holding on to that will never go back up? And if that's the case, it's typically best to sell it that day.
Right. So understanding your whole portfolio is one of the key things in building an investment portfolio that'll last a lifetime. We need to make sure that we have money that is set aside for our future. At Akers Financial Group, we're a local, we're independent. We don't report to a big company on Wall Street. We report to you, the client. We have offices in Forest Hill and Lutherville. This is all about retirement, not about us. And it's about your retirement. So to begin winning in retirement, give us a call at Akers Financial Group to schedule your free meeting. Call us at 833-WIN-RETIRE. That's 833-WIN-RETIRE. When you call, you can leave us a voice message, and Susan will call you back on Monday to schedule an appointment with one of our team of advisors. Start planning for your retirement now. Call 833-946-7384 or visit AkersFinancialGroup.com. The smartphone you have in your hand has more computing capability than the first Apollo rocket ship that went to the moon. That computer power has actually heightened the volatility of the market. We will explain when we come back in a moment. Akers Financial Group was founded on the principles of integrity, trust, and service. We believe each and every client is unique and deserves advice and implementations that apply directly towards their personal financial fingerprint. This financial fingerprint tells us the objective risk tolerance and purpose of the investment and insurance tools that we use to assist our clients in reaching their goals. By discovering the purpose of each financial decision, we can help you accomplish your goals. Intelligent financial design starts with a detailed balance sheet and cash flow to know where to start. This leads to a financial decision that will allow you to reach your goals with your risk tolerance in mind. Our relationships begin with an initial consultation and grows with each meeting. We would be thrilled to work with you and begin your planning process. Call us at 833-WIN-RETIRE. That's 833-946-7384. Or visit our website at AkersFinancial.com. Member FINRA SIPC.
Hi, this is Jesse Cunningham, the owner of Mountain View Insurance, and we are proud to be affiliated with Akers Financial Group. We, too, base our business on integrity, service, and acknowledge that every client's insurance needs are unique to their own situation. At Mountain View Insurance, we specialize in car insurance, home insurance, and umbrella coverages, all designed to protect your assets that you've worked so hard to earn. When serving our clients, we focus on creating a protection plan that is appropriate to your needs. After we determine the correct plan, we then go to shop for you. Mountain View Insurance is an independent insurance brokerage, and that means we have access to many top national and regional insurance carriers. Let us build an appropriate and affordable insurance plan for you and give us a call directly at 410-262-3176. Once again, that's 410-262-3176. This is Jesse Cunningham, owner of Mountain View Insurance, and I look forward to hearing from you.
You're listening to a pre-recorded show. Welcome back to Winning in Retirement. Call 833-WIN-RETIRE now to schedule a visit with Brian and his team and begin winning in retirement. Once again, here's Brian Akers.
Welcome back to Winning in Retirement. I'm Brian Akers. Here with me today is Alex Monk. We are certified financial planner practitioners from Akers Financial Group. We want you to be winning in retirement. This show is going to be an unusual show because with investments, you might be experiencing tricks or even treats this last week or two as the market volatility has even increased from where it was. The question for the second quarter is this: the smartphone you have in your hand has more computing capability than the first Apollo rocket ship that went to the moon. What do you think of that, Alex? And what do you think of the fact that with that computer power that we all have in our hands, that also raises the volatility of the market?
There is no way in the world I would have gotten on that spaceship knowing that now. I mean, that sounds terrifying. I'm scared to fly Spirit Airlines, let alone basically a flip phone.
Right. So the rocket ship back in the 60s, that computer capability was enough to get it there. And the amazing thing is what we have in our phone is just incredible, the technology. That technology has led to apps and different ways of doing investment trading now, and then that are just unbelievable compared to just 5-10 years ago.
Oh, yeah, and it was kind of a perfect storm for that this year with sports not being played. So there's a lot of action, for lack of a better words, that needed to go somewhere. And some of it went to the stock market.
Right. So what do you mean by that? You mean action in that it's people who like to take risk, extraordinary risk with their money, will play the stock market like that?
Right. So it's people that want to try to double their money in a week or 2 weeks, something like that. Basically a keynote ticket, putting it on a roulette table, essentially.
Right. And so what happens is this, that there's investors and then there's more the gambling approach. The gambling approach is tough because you have to make two very good decisions. You got to buy right and sell right. And many times that's impossible to continuously do in the right way. And the reason we say that is that over a long-term period of time, we've never seen that work. Now, some people can make money very quickly in the short runs. And they can make money very, very fast. And then the key thing is to take money off the table, to set money aside that would be more directed towards long term, not to try to keep going with all in.
And you have some of the newer investors going towards the option market, which is kind of like a supersized value meal of risk, especially if you don't know what you're buying, how options work, how margin works. So there's a lot going on, and I don't think it's your normal investment type mentality. It's let's trade, I don't have anything to do. That's not a repeatable pattern that you can get through retirement with. And do you really want to be at your computer all day when you're retired, trading?
Some of our retirees enjoy it, and we think it's a really good thing if you want to do some trading is to partition a portion of your portfolio, but nowhere near all the portfolio. In the dream world of investing, you would want to trade your Roth IRA where your gains would be in tax-free world, where you can have that gain grow tax-free to your future. You would not want it into like an IRA or in your personal account where you're paying short-term capital gains, because that's what happens when you, if you have an account just your name only and you buy and sell too fast, you end up paying short-term capital gains.
The only good thing about that taxable account is when someone does lose money and they sell it, they can offset some of that gain. But I agree with you, Brian. I think there's going to be some people out there this year that may have made some money and are going to be very surprised what it does to their tax return.
Yeah. Very, very true. So it's a short-term capital gains tax. Let's just cover that real quickly. So if someone has a stock that they hold less than a year, then it'll be at a higher bracket. What do you mean by that, Alex?
So short-term is taxed as a different rate because of, just the way that the capital gains and dividend structure in our tax code works. But if it happens within the first year, they tax you at a higher rate, and you'll feel it immediately.
So example would be that capital gains has its own brackets of 0, 15, and even 20%. And then your regular tax bracket, your ordinary income bracket, would go 10, 12, 22, 24, and keeps on going up to 37. That ordinary bracket is what you'll be taxed at for short-term capital gains instead of the advantage of long-term capital gains. The other thing you have to watch is if you have a stock that you're trading and you take a loss, you can't buy that stock for about 30 days. Is that right?
That's correct. That's called a wash sale. So you get your 1099 at the end of the year from wherever you're trading, and it nets that out. So you do not get to claim that loss. You got to be very careful about that, because if you're tax harvesting right now or towards the end of the year, you want to make sure that you don't violate any wash sale rules. And that's one of the reasons we like to meet with people this time of the year, Brian, and give them a second opinion. See what they got going on. Maybe explain what they have is typically how it works. Because people have so many different things, and they're not professionals, so they should be seeking help, because it's confusing.
Everything works together. I just heard you pull out your Towson University accounting card, because you do know that your major was accounting. And I heard you using the accounting work, which is great, because what happens is that every investment decision makes a tax decision or a tax problem, depending on what you're doing and how you're doing. When it comes to technology and how it's heightened the market volatility, it's because of people basically having higher volume, higher trading during certain days on certain stocks. It's also caused this year for a few stocks to lead the market because people are all into that one stock. A stock market is an auction. An auction is played on totally by demand. So if a lot of people want to buy one name of a stock, that stock will go up, even if it's way beyond its normal price to earnings ratio. And that's by demand of people wanting to buy the stock. The same thing works on the downside. When people start selling, and if everybody jumps on the selling side, they'll be looking for buyers. And that will drive prices down very quickly on certain stocks.
It's that makes sense when you say it like that, but you throw in some emotion, and those decisions get a lot harder, especially if your greed has kind of kicked in, where we see people making money and we want in. And that is a tough thing to not fall susceptible to, because I mean, I don't know about you, Brian, but making money is fun.
Yeah, it can be very, very fun to make it quick. And usually if you're at a get-together or an outdoor party, what will happen is everyone will tell you their wins. They'll never tell you their losses. One of the things is that when you win, it sure sounds good, but a quick loss can take away almost all that gain. One of the ways to look at that is this. If you have $100, or let's say $1,000, let's make the number a little bigger, $1,000, and it drops to $500 on a loss, that's a 50% down. Now, if I'm at $500 and I go back to $1,000, guess what? I made 100% on my $500 to get back to $1,000. That sure sounds great. So basically, the downside sounds downplayed, because if you lose 50%, you still lost $500. On the gain side, it's 100% gain. So this numbers game and percentage game is sort of funny when you think about what's been going on.
Oh, absolutely. Big losses are one of the hardest things to make up, because the example you just gave, you got to double what you lost on the upside typically. So that's a tough thing to do, especially if you sell at the bottom.
Absolutely. Even this week, they announced the gross national product up 33%, which sure sounded good. But the second quarter, we had a GDP number that went down 31%. And what's amazing is that down 31 and then up 33 doesn't get you all the way back. It just gets you part of the way back, which means that the overall GDP is actually down. So it's an unusual thing on how you use numbers when it comes to evaluating financial.
In college, they called that carrying the one.
Carrying the one?
Yeah.
Can you tell me more?
I think that's a long division, or addition. I forget.
Let's go back to financial planning. We'll leave math for the specialists, right? But the idea is this. Mentally, when we are facing a market that's moving up and down, it's very hard to want to keep your money in investing. You want to jump out. That jumping out, that getting going to cash, does a couple of things. You sell, and then you're out. That means if the market would turn around and go up quickly, let's say whatever would happen in the near future, if that would be positive for the market, you could miss out on that gain, and then you get back in at a higher number and you miss out. What we want you to think about doing is this. Make sure you build your portfolio to last a lifetime, not just this week. The idea of selling and going to the sideline means that you have too high a risk with portion of your stocks. Hopefully you don't have all of your money that way. We want you to be properly allocated in your portfolio to make sure you can win through retirement no matter what is brought to us. Make sure you're allocating properly.
That's so true, Brian. You do not want to have one really, really bad day, week, or month in the market that changes potentially the next 30, 40 years of your life. That is not a good thing.
One of the biggest mistakes we've seen are people that they believe they're short when it comes to their retirement. They need to make their money, make more money faster. And what I think they're heading towards is a big disaster, because if you've got to raise your return to 10, 15% to make your retirement numbers are probably wrong. You need a more realistic number of 6 to 8% as a goal, something around 5, 6% in retirement years in this environment. How we do our retirement planning is extremely important. We want our retirement to be an easier time on our stress. We want retirement to be about getting our time back. You decide how to use it. Before your retirement, usually time is tied up by your work and other commitments. A lot of that goes away when you retire. What we want you to do is be winning in retirement. You can do that by calling us at 833-WIN-RETIRE. That's 833-WIN-RETIRE. When you call, you can leave a voice message, and Susan will call you back on Monday to schedule an appointment. That appointment can be done over the phone, through a virtual video, or even mask to mask in one of our offices. Start planning for your retirement now. Call 833-946-7384 or visit AkersFinancialGroup.com. How much financial security do you need in your retirement? We'll talk about that when we come back.
You are unique. Just as no two fingerprints are alike, each individual's financial situation is uniquely their own. That's why the Akers Financial Group's team of advisors begins each relationship with a proven process that identifies your financial fingerprint. We'll guide you through a series of steps designed to provide a complete and accurate snapshot of where you are right now. Everything we learn about your financial fingerprint will become part of a detailed financial plan created especially for you. We'll never give you a cookie-cutter proposal or suggest a one-size-fits-all portfolio. The financial plan takes you from where you are now to where you need to be. Begin by discovering your financial fingerprint right now by going to getmyfinancialfingerprint.com. That's getmyfinancialfingerprint.com.
Member FINRA SIPC.
Imagine you're retired. You wake up in the morning and you don't even know what day it is. Every day seems like a Saturday. You can sleep in, cook a nice full breakfast without thinking about morning traffic or work deadlines. The Saturday calmness you used to crave is now your everyday feeling. You're not worried about your retirement income or how your investments are doing. Your biggest decision that day is where you're going to drink that first cup of coffee. Is that the kind of retirement you want? If it is, then sit down and talk with the team at Akers Financial Group. They want to help you get there. They've been helping families in Maryland plan for retirement for over 30 years. Call to schedule your complimentary meeting at 833-WIN-RETIRE. The number again is 833-WIN-RETIRE. Start planning for your retirement now. Call 833-946-7384. Member FINRA SIPC.
You're listening to a pre-recorded show. Welcome back to Winning in Retirement. Call 833-WIN-RETIRE now to schedule a visit with Brian and his team and begin winning in retirement. Once again, here's Brian Akers.
Welcome back. I'm Brian Akers. Here with me today is Alex Monk. I'm certified financial planner practitioner from Akers Financial Group. Today's show is about your investment experience. Is it tricks or treats? There's a lot going on in this volatile market. This segment is going to be about how much financial security do you need in your retirement. Make sure you have what you need secured for your future. So as we begin the second half of the show, Alex Monk, you're coming out of the locker room. You're ready, but you're feeling very calm because this is one of the sweet spots at Akers Financial Group, and that we love to talk to people about how to balance and to make sure their retirement will last a lifetime.
Absolutely. And for me, Brian, it's almost a puzzle or a game every time I see a new scenario, and I get to figure out, what are the different options? What's the best way to do this? And one of my favorite ways is to kind of build a personal pension, especially for people that don't have pensions, if they're not with a company that gives them that lifetime benefit. We have to go seek that in other places. With a volatile market like this, low interest rates, insurance products can make a lot of sense for people. Income riders on these products are something that promises the payment for the rest of your lifetime, but it doesn't give away all your money, like a straight annuitization or one of those J.G. Wentworth commercials where they want to buy it out from you. And those are annuities, Brian, and that is a four-letter word basically in this business, depending on who you ask. And I think it's more than four. I got it. But I think that perception is wrong because there's so many different types of annuities. It's just like going to Dick's Sporting Goods and walking into the golf section. There's some stuff there that's terrible, and there's some stuff there that's great. It's just a matter of, is it the right thing for that person, for their game?
Exactly right. When I think about the thoughts of financial security, what has to happen is you have to know your goals, know your needs, know what's going on, so you can take the least amount of risk to reach your goal, not the opposite, which is the most amount of risk. So when people are reaching for return, grabbing for return, trying to get more and more return on their money, many times they're sacrificing the security part that they need. So in a typical retirement portfolio, we want to have the fixed side to be very secure. We want to make sure that you're not risking your principal. How do we do that, Alex?
So our answer for that is a combination of things. We use cash in some scenarios, CDs, shorter term in the bank, fixed annuities, which right now are just blowing CD rates out of the water. They have a little bit more stringent lockup, meaning penalties if you withdraw it early, but it's a good place to look for increasing some yield versus the banks, which is really pathetic. And then we also use fixed indexed annuities, which is like a fixed annuity, but the interest is tied to an underlying index, whether that be the S&P 500, the Dow, and you're guaranteed by the insurance company not to lose. But you give something up for that. There's no free lunch anywhere, right? You either have limited upside, or you have to keep the contract there for a certain period of time.
Absolutely. So with a fixed index annuity, the risk or loss you could have is in the surrender period. So some policies are 5 years commitments where if you got out early, there could be an early withdrawal penalty, or 7, 12, and we've seen some in that 16 to 20 year range, which we think is probably way too far out. But in reality, what happens is this, is that the 10-year Treasury drives the risk-free rate of return. And that's around 0.8 approximately this week. What that means is that it's less than 1% for risk-free money. That means your CD rates, things like that, will all be right around that number when it comes to your return. At 1%, your money doubles amazingly in about 100 years. So that's not what we would consider an investment to be able to do something that we love to say that it needs to do. We need to beat inflation after tax over time to make a portfolio that can keep up throughout a higher inflationary market, which could happen in the near future. So when we're talking about securing your assets, securing your investments, we want a piece of it to be where it's invested, where you're not going to lose your principal. So when it comes to putting money into fixed index annuities, that would be as opposed to using bond funds. Is that correct, Alex?
Yes. Bonds have had a good run this year, but that's because interest rates have gone way, way down. On the other side of that scenario, when interest rates go back up, those bonds lose principal. And they're only promises of whatever the company is to pay it. I've seen companies default on their debt all the time. If that's what we're counting on, a 4% coupon bond's still not going to get you to that 6 to 8 range. And you're putting principal at risk. The nice part about backing out the risk of your portfolio is you can take more risk in other places versus just blind risk on the whole portfolio. So if you know that no matter what happens, you're going to have your base amount of income protected, you're able to take that risk because you're not putting the game on the line. And that is a really important thing that we stress to people all the time.
Right, because I guess some things I think about this year is this, is people look for yield and they see yields at 10% and higher, and they're jumping at that, not understanding that the reason yields are higher is because the asset is probably down in value, and that means that the risk of default is a lot higher than something like a 10-year Treasury, which is at 80 basis points or 0.8%. So whenever you look for a return, if you're making 2%, you're making double the risk-free rate. Not a realistic assumption on short and medium-term money. If you can get 2%, that's really pretty good right now. This environment has caused many of our clients to look at refinancing their mortgages. So that's great for the person that's a debtor, someone that's in debt, is to look at refinancing and shorting your mortgage from 30 years to 15, designing a plan to make things work better when it comes to getting out of debt faster so that you can become an investor, a cash saver. Now, the problem with being a cash saver right now is that interest rates are so low, you're not being rewarded for your money. And the scary thing is some people are taking more risk with their risk-free money, and it's something we don't recommend. We want your secure side, which we think should be about equal to your age, which means if you're about 60 years old, you might want to have about 60% of your money with zero risk. Is that how you try to do the calculation, Alex?
Yep, that's a pretty easy way to get a ballpark range, and then depending on the person's scenario, their experience in investing, it can skew up and down. The higher the net worth, the more risk you can take. But at that point, you have the other side of the argument: why take the risk if we don't need to? Social Security came out and said it's increasing their payment by 1.3%. That's the inflation rate, they're saying, from last year. The 10-year Treasury is only paying about half that, so you're losing massive purchase power if you're in cash.
Yeah, very true. So when people are trading and going to cash for safety, they're not going to make any money sitting in cash, and that'll drive them back into the market ultimately, right? Right, Alex?
At a certain point, they have to do something to increase their return, and that usually or always means taking on more risk or a time commitment. And that's the last thing you want to do, is when you're stretching to make these things work, you can get caught blindsided. And that is not the scenario we want people to be in.
Well, the scenario we want you to be in is this. We want you to know where your next check is coming from when you're retired. To win and retire is not to worry about the flow of income. We design that if you need it, usually with the use of some annuities, through index annuities, through things called income riders that can actually allow for escalating payments over time based on how the investment does. We don't want to take a risk on all your money. You need to have a properly proportioned portfolio to design income that'll last a lifetime. This income flow can be dividends and interest, but it also needs to be something that can be steady and go through the worst of times. And that's something, if you go back in history and look at the annuity companies that have been around since the 1800s, they have performed and delivered through the worst of times. So when we're talking about financial security, we do want you to have a portion of your money that way so that you're not emotionally dragged into the market with all of your money. Right, Alex?
And don't chase these contracts that are promising these huge things. You need to make sure that if someone's going to be called your safe money, they are actually a reliable and safe company. And that's what we want to make sure is the case for all of our clients. I never want to tell somebody, this is our money that we know is going to be there, and then the company doesn't do what they're telling us. So it's important about putting thought into the way you structure the safety side of your portfolio.
Absolutely. So how much financial security do you need in your retirement? We believe that's an individual answer based on your financial fingerprint. We need you to sit down and have a second opinion with one of our team of advisors where we go over where you are now and make you a retirement income plan that's going to last a lifetime. It is very important to design money that's going to be reliable and dependable throughout your retirement years. That gives you the security to know that you have retired well and you'll be truly winning in retirement. We want your retirement to basically have the biggest worry be, where do I drink my cup of coffee, rather than the stress of where my check's coming from. Your retirement income can be taken care of by the trustworthy team of advisors at Akers Financial Group. We'd like to have you give us a call to set up a meeting with Akers Financial Group. You can call us at 833-WIN-RETIRE. That's 833-WIN-RETIRE. When you call, you can leave us a voice message, and Susan will call you back on Monday to schedule an appointment with one of our team advisors. Start planning now for your retirement. Call 833-946-7384 or visit AkersFinancialGroup.com, or you can even check us out on Facebook. Ignore the noise now and in your retirement. We will explain when we come back.
Are you reacting or creating with your investments? When you have a sound financial plan, you don't have to be reacting every day. Let us help you create. Tune in to Winning in Retirement, Saturdays at 11 a.m. on 105.7 The Fan. Brian Akers of Akers Financial Group is a registered representative offering securities through Kalos Capital Incorporated, member FINRA SIPC, and investment advisory services offered through Kalos Management Incorporated, both located at 11525 Parkwood Circle, Alpharetta, Georgia, 30005 678 1100. Akers Financial Group is not an affiliate or subsidiary of Kalos Capital or Kalos Management and does not provide tax and legal services. Are you reacting or creating with your investments? When you have a sound financial plan, you don't have to be reacting every day. Let us help you create. Tune in to Winning in Retirement, Saturdays at 11 a.m. on 105.7 The Fan. Brian Akers of Akers Financial Group is a registered representative offering securities through Kalos Capital Incorporated, member FINRA SIPC, and investment advisory services offered through Kalos Management Incorporated, both located at 11525 Parkwood Circle, Alpharetta, Georgia, 30005 678 1100. Akers Financial Group is not an affiliate or subsidiary of Kalos Capital or Kalos Management and does not provide tax and legal services.
Long before 18-year-old Brooks Robinson was signed to play third base, and years before Natty Boh began brewing at the corner of Conkling and O'Donnell Streets, Baltimore families relied on the Evans family and the Evans Funeral Chapel and cremation services to help them during some of their most important family moments. Hi, I'm Charlie Evans, and for 4 generations, my family and I have been there for families, providing care and compassion in their time of need. Evans Funeral Chapel and Cremation Services provides the best facility, staff, and personalized service for your family. We have 3 convenient locations to serve the community: Parkville, Forest Hill, and Hereford. For more information, visit us online at evansfuneralchapel.com or call 410-665-9444. Evans Funeral Chapel and Cremation Services, serving Baltimore families since 1865. I invite your confidence.
This story is called The Ugly Truth About Timeshares. If you think you've done your family a favor by buying a timeshare, well, you need my help. Hello, I'm Chuck McDowell, founder and CEO of Wesley Financial Group. 10 years ago, I started helping folks cancel their timeshare. And the process started what's now called the timeshare cancellation industry. Timeshare is the only thing that you can buy that you can't tell me how much it's going to cost or when it's going to end. When you buy a timeshare, you give them a blank check to fill out any amount they want for annual maintenance and assessment fees. Sounds crazy, right? Well, the crazy thing is, this never ends. Stop the insanity today. Call my office now. I guarantee if we can't cancel your timeshare, you'll pay nothing.
Were you lied to when buying a timeshare and want out? Get the facts about timeshare cancellation. Call Wesley now for your free information kit. 800-506-3355. 800-506-3355. 800-506-3355.
You're listening to a pre-recorded show. Welcome back to Winning in Retirement. Call 833-WIN-RETIRE now to schedule a visit with Brian and his team and begin winning in retirement. Once again, here's Brian Akers.
Welcome back to Winning in Retirement. I'm Brian Akers, and here with me today is Alex Monk. We are financial advisors from Akers Financial Group. Today we've been talking about your investment experience. Is it having tricks or treats with what's going on in the volatility of the market? We want you to understand that Akers Financial Group wants you to win in retirement. Today we've been talking about volatility and things that we need to think about as we're investing and not to be involved in the commotion, the emotion, or even the potions that are going on in this volatile market. We actually have more information on our website for you at akersfinancialgroup.com. That's AKERS Financial, then group is GROUP.com. If you go there, you'll see up top of our tabs, you'll see webinars. Under webinars, we have some new topics, and we have a webinar coming up live again on November the 12th at 4 p.m. It's a Thursday afternoon. It's going to be a webinar that's designed for healthcare and funeral pre-planning. So it's a topic that people really need to make sure they take care of, and then they can retire and enjoy the rest of their time. We do thank you for listening to our show, and we are here in the fourth quarter. We've been talking about many things today, but we believe that you should not ignore everything in your life, but you should ignore the noise that's going on in the market. So and during your retirement, you want a portfolio designed to be able to handle things whenever the noise is trying to make you do the opposite of what you should do. So Alex, what do you think about ignoring the noise that's out there and all this craziness right now?
It's easier said than done, but that's our job, right? We're there, especially during these kind of times, Brian, to answer the call, explain what's going on, and show you the different options that are out there to make the changes based on whatever fears you have, but also to show if you have proper asset allocation, you don't have to worry about it. We can make these things an opportunity. We can convert to Roth. We can buy, we can add money when things go down, especially if it's something that we are going to want to own for the next 10, 15 years, whatever it may be. So we have to put ourselves in the right setup so that regardless of the direction the market goes in, we're able to create and still have reliable retirement income.
Absolutely, because when I think about the market movements and how people begin to get fearful when you start seeing a 3% down, that means that they really are not, how you say the right word, they are not secure about their own financial planning. If you have a solid financial plan supporting your thought process, you then can go into a market the opposite way of fearful. And that is, you're going to be very hopeful and very well designed and oriented to be able to make it through whatever the market brings. Some of the mindsets that I want people to try to rethink is this. When you're retired, A lot of times it's return of your money that's more important than return on your money. So one of the things that we've seen is that chasing returns is something that most retirees don't want to do. They want to know where that money's coming from, where that check's coming from. And that is how we try to design a financial plan that'll last a lifetime.
The last thing that you want to do when you're in your 70s is go get another job. You don't want to do that. You don't want to have to go back to work. So before you make that decision, you need to sit down with somebody and make sure it's the right decision. You're not missing anything. And that's what we do in Second Opinions all the time, Brian. I mean, we see these things all the time. It's worth it.
Absolutely. Now, there's some people, you know the person. You're sitting at a restaurant and you're sitting there relaxing. You know what you're going to order, and all of a sudden your friend shows up really panicked, and they're talking about their stocks and how, oh man, I lost this percentage or this much money yesterday. I don't know what to do. I'm just going to all go to cash. And you're sitting there all relaxed about things. That is sort of the opposites of what's going on in the market right now. There are people that have saved for a long time. They've put aside their money, paid off their debts. They've prepared themselves for a retirement that'll last a lifetime. The problem is other people are trying to race to retirement, take as much risk as possible to get there quicker, and little do they know is that they're risking all of it. If they fail, and it could be a big fail, where we could have a market downturn once again, and you could actually sell out of a downturn and lock in losses permanently. And then what will happen is you'll see that your money won't grow. So we think back on clients and new clients that came in after the 08-09 crisis. The things that we learned is people that stuck with it, people that had a good plan going in, people that did not bail out 100% to cash and then try to get back in at the wrong time. Those are the people that made it, or the people that were having a good plan, one that stuck with high-quality investments through the toughest of times.
And we're not trying to reinvent the wheel here, Brian. We don't want to do whatever the flashy trading thing is, all these new derivative products or whatnot. But good old-school style, smart investing and taking the right amount of risk in the right places is the way to do it. But it takes time, and you can't judge it after 1 year. You got to look at it at 5, 6 years, 7 years to see where you're, how are you really doing? The short-term movements are going to happen. We know that for a fact. But when everything's going up, it's real easy to forget that it can go down.
Now, I was thinking about that idea of a second opinion you were saying earlier. What does a second opinion comprise of? Well, it really comprises of you and a financial advisor sitting down and just going over where you are. And then what we do at Akers Financial Group is we review it, and then we tell you if everything is good. If it's dead on, we'll say so. If it's not, we'll find ways to improve. We'll explain that in writing. These are things you need to do to improve. A second opinion is where you look at where you are now. We call that financial fingerprint. And then we talk about what you're trying to reach, what goals you have, what risk you want to have. And then typically we listen to what you've learned throughout your lifetime. What that means usually is if you have certain investments that were sold to you, what we find is that we hear you repeating what you're told. And sometimes we have to sort of explain that in greater detail than maybe been explained before. Have you ever had that experience, Alex?
The most, the typical one we get is, when they sold me this, they told me it's going to do 8%, 10% a year, guaranteed. And then you have to explain that that is not a cash number. That is a phantom number that can only be accessed as payments. It may be a good thing for you. If it's used correctly, it can be a good thing. The fact that it wasn't explained correctly really bothers me. I want people to know what they have. Why do we have this? What does it mean? And some of them are like, I don't care, Alex, just do what you do. But I'm going to still, every time they show up, try to explain it.
Yeah. The hardest part is this, yes, you want a financial advisor you can trust. You want one that wants you to be educated, to learn what you own. so that you're not deceived or drawn in by emotion or news or social media or technology. All these things that are out there. So you're not drawn in and said, oh, I'm going to do that. And all of a sudden something occurs where you have a setback in your retirement plan because of some quick emotional decision. What we want people to think about is this. Where are you? And make sure you know your plan to the future.
Absolutely, Brian. And finding out where you are today is the important thing. We do this all the time. We can't explain it to you in somewhat normal human speak. Instead of throwing out these big lingos and overwhelming people with words, we'll try to, relate it so you know what it is. And once you know where you're at, you need to be informed on what your options are, because there's a lot of different ways of doing things, and they can all be successful. It's just about what makes sense for you in your situation, and what anxieties do you have about retirement or life, etc.
Right. Some of the hardest decisions that people have to make is to decide when it's right to change advisors, to find one that is built for their retirement years. Now, the crazy thing when it comes to this environment we're in is that there's a lot of volatility. And many times we'll think, oh, I'll look for another advisor later. I'll have a second opinion later. We think it's better to do it before something bad happens, before something volatile or something that affects your whole portfolio happens, to have a proper design so that when you're heading into things that are tough times, you know what's going on. You know that you can weather the storm that might be heading. You need to be able to handle this volatility by proper financial planning. Make sure you're doing things like this. If you're younger, I want you to be buying into the volatility. The best thing to do is out of your retirement, out of your paycheck, is to save into the stock market, this up and down. You want to be buying now and buying often and buying every paycheck as the market swings up and down. You don't want to be buying cash and then pushing in later. You want to be dollar cost averaging into volatility. If you're near retirement, we want to make sure you have proper allocation. There's just so much people can do. Any final words there, Alex?
I tell clients, when there's blood in the streets, we shall make money.
All right. Well, I think that's a good final word on Halloween Day for that. Thank you very much. Thank you very much, Alex. All right. Maybe you are in that reaction mode. Maybe you're defensive in every way. It's like you're sitting on the sofa and you keep moving back and back and back, reacting. Reacting has the energy of being defensive. Creating, now when you do that, you sit up, you sit forward, you have a forward energy of creating. The people who get through this in the best shape are the ones who take opportunity. This is the time to be in the creating mode, in the solution mode. It's a choice. We want you to win in your retirement by taking this opportunity to begin planning with us at Akers Financial Group. To schedule your free meeting, call us at 833-WIN-RETIRE. That's 833-WIN-RETIRE. When you call, you can leave us a voice message, and Susan will call you back on Monday to schedule an appointment with one of our team of advisors. This can be in person, mask to mask. It can be on a video, a Zoom meeting, or it could be a phone call. You just give us a call at 833-946-7384 or visit AkersFinancialGroup.com. Thank you for listening. I'm Brian Akers from Akers Financial Group, and we want you to be winning in retirement.
You've been listening to Winning in Retirement with your host, Brian Akers of Akers Financial Group. Brian Akers of Akers Financial Group is a registered representative offering securities through Kalos Capital Incorporated and investment advisory services through Kalos Management Incorporated. Akers Financial Group is not an affiliate or subsidiary of Kalos Capital or Kalos Management and does not provide tax and legal services. Advice given on Winning in Retirement is general in nature, and one should seek further advice from their financial advisor, broker, attorney, or tax accountant before investing. Be sure to read each prospectus carefully to understand all the risks associated with each investment. Are you reacting or creating with your investments? When you have a sound financial plan, you don't have to be reacting every day. Let us help you create. Tune in to Winning in Retirement, Saturdays at 11 a.m. on 105.7 The Fan. Brian Akers of Akers Financial Group is a registered representative offering securities through Kalos Capital Incorporated, member FINRA SIPC, and investment advisory services offered through Kalos Management Incorporated, both located at 11525 Parkwood Circle, Alpharetta, Georgia, 30005 678 1100. Akers Financial Group is not an affiliate or subsidiary of Kalos Capital or Kalos Management and does not provide tax and legal services. Are you reacting or creating with your investments? When you have a sound financial plan, you don't have to be reacting every day. Let us help you create. Tune in to Winning in Retirement Saturdays at 11 a.m. on 105.7 The Fan. Brian Akers of Akers Financial Group is a registered representative offering securities through Kalos Capital Incorporated, member FINRA SIPC, and investment advisory services offered through Kalos Management Incorporated, both located at 11525 Parkwood Circle, Alpharetta, Georgia, 30005 678 1100. Akers Financial Group is not an affiliate or subsidiary of Kalos Capital or Kalos Management and does not provide tax and legal services. Are you reacting or creating with your investments? When you have a sound financial plan, you don't have to be reacting every day. Let us help you create. Tune in to Winning in Retirement Saturdays at 11 a.m. on 105.7 The Fan. Brian Akers of Akers Financial Group is a registered representative offering securities through Kalos Capital Incorporated, member FINRA SIPC, and investment advisory services offered through Kalos Management Incorporated, both located at 11525 Parkwood Circle, Alpharetta, Georgia, 30005 678 1100. Akers Financial Group is not an affiliate or subsidiary of Kalos Capital or Kalos Management and does not provide tax and legal services.
Appreciating was a paid program, and the views expressed on this show do not represent the views of WJZ-FM, Entercom Communications, its sponsors, or affiliates. Broadcasting from the Thompson Creek Window Company studios. High-quality windows at an affordable price. Direct from their local factory. This is WJZ-FM Catonsville, Baltimore. 105.7 The Fan. A Radio.com sports station.